Hello and welcome to ATF TV. I'm Christine Joe reporting from London, and today we have with us Varun Mittal. Varun is the Global Emerging Markets Fintech leader at Ernst & Young and is a specialist in digital business building and Southeast Asian financial services. Welcome to ATF TV, Varun.
Hi, Christine. Thank you so much for having me here.
Varun, the global migrant workers' labor force has grown exponentially in the past decade. What impact does this have on spending patterns and financial services needs? How is Fintech positioned to leverage on this opportunity?
Fintech solutions have been built ground up for smaller value transactions for migrant workers who may not always have a fixed resident address. For the migrant workers, for them to get a proper bank accounts is not always that easy because they're living in shared accommodation or keep moving houses every few months. So they need solutions which are able to adapt to their need and also able to handle micro remittances. If we have to look at traditional banking remittance with a fixed fee charges, that will erode. If, for example, you want to send $10, $20, $30, that one doesn't work for the traditional system. So fintechs have been really instrumental around that. Also, when it comes to short-term micro lending, when they want to get a cash advance because there is some emergency at home or there is a festival, a lot of these newer fintech solutions are able and get it to their families in the shortest possible time. That's another example of how fintechs have been trying to support migrant workers as post-COVID economy opens up for them.
Mainstream banking is often accused of neglecting certain sectors of the economy like SMEs and individuals. How is Fintech filling this gap, and how fast is this service segment growing?
The premise is sometimes that blame is right and sometimes it's exaggerated in some respects because the premise is a lot of these financial institutions are operating in many jurisdictions, 10, 20, 30 countries. So their cost of compliance becomes higher running that complex setup. While a lot of these fintechs are smaller point to point running 2 market, 4 market, 6 market, and plus they do not have the legacy in front. They're not offering a whole suite of services. They're trying to do this one thing and one thing well, which enables them to have a lower cost structure, lower cost of infrastructure. And that is what enables them to service that need. But on the same hand, a lot of banks have also started to open up. They have opened their gig economy platforms. They are trying to have lightweight services to support these kind of workers. What we see is a healthy competition where both ways the consumer is the winner.
The gig economy, as you mentioned a bit earlier, has expanded rapidly as temporary flexible jobs are now commonplace, with firms preferring to hire independent contractors and freelancers instead of full-time employees. What opportunity does this present to the fintech sector, and how can they expand their footprints in this segment?
I'll give a very specific example of employee benefits. Because if you are a gig economy worker, you do not have a formal insurance plan, and neither does your family gets covered. And if something happens, then you are out of job for a few days. You cannot imagine something as simple as you get fever and you cannot go to work or drive for 5 days, and your family is dependent on that income. So there are fintechs across the world who are starting to solve those problems for those flexible employee benefits, who are also offering early wage access. So instead of waiting for the weekly settlement or the monthly settlement from the platform, they are able to access their daily wage early enough so that they don't have to go to a payday loan player. So as the employment evolves, the employee banking proposition, so what used to be the traditional employee banking proposition has become a solopreneur banking proposition to look at all their needs. And one important thing is the line between SME bank account and a personal bank account doesn't exist for such people. They are the one issuing invoices. Imagine if you are somebody hosting shows, somebody who is doing photography. Some days you are working, some days you are doing on your own. And so you have to do your tax filing. You have to do your accounting and tax filing at that point while ensuring that you can apply for any government grants and schemes or, like, for example, unemployment benefits, which it comes. So there are fintechs which are trying to solve that, how help you understand how you become eligible. Is a self-employed person, can a self-employed person file for unemployment subsidy which is coming from the government? It's not a straightforward answer. So there are fintechs who are trying to be that counsel, that trusted advisor with these people across different aspects and facets of their lives.
What are the other innovations in fintech that are poised to take advantage of the post-pandemic recovery? Will their importance diminish when things normalize, or is this the new normal?
See, the premise is a lot of the behaviors will be standardized. Those behaviors will stay for good because those have been changed. It takes a lot of external impetus to change those behaviors. The key question will be who continues to service those behaviors. Just to give an example, we are doing this interview over Zoom. People will embrace the fact that they will continue to use different video streaming solutions to interact and engage. But in 3 years from now, will they use this app or some other app? That will depend on how other apps evolve and how Zoom evolves from that perspective to offer that functionality. So the key part is the fintechs would need to consistently evolve. They would need to look at how do they build sustainable financial models, how they can be sustainable, viable, and what's the right partnership models for them. While banks also needs to figure out which parts of the value chain do they want to serve. If they want to give up servicing some parts of long tail, or I would say the lower revenue customers, what is their plan when those low revenue customers start to become the higher revenue customers? What is the transition strategy which they want to put in place?
Thank you, Varun, for being here today.
Thank you.
And thank you, everyone, for watching. For more stories like this, please log on to asiatimesfinancial.com for the best Asian news on markets, economies, and more. I'm Christine Zhou reporting for ATF TV.